Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And as every weekend, I want to give you my weekly update and review on week 6, 2021, with a full insight to my real money North American portfolio. And the last week, there was a lot of reported Q4 earnings, and so also with the companies in my portfolio. We have a lot of companies beat the expectation. Air Canada misses the expectation, has the worst year in their history because of the pandemic situation and the problems for the travel industry and the airlines at all. And so they had to report it a big loss. But still, I will keep Air Canada because, as I tried to explain in the other videos about Air Canada on my channel, I think Air Canada is still one of the most solid airlines in the world. And on the other side, Coca-Cola, Legend Plaid, Disney, and Jack Henry beat the expectations. And for Disney, for example, I also made analysis of the reported Q4 earnings. You find a link to this video here up on the screen. And as always, we look at the winner of the week, and the best performing stock in my portfolio this week was Intel, the biggest position in my portfolio. And also here you find deeper analysis and also a lot of other videos where I describe why I think Intel is way undervalued and a good long-term investment. And so they performed quite well with 4.48% to now $61.81. And here you see the chart of Intel over the last year. You see the up and down, and all the green dots you find here are buys when I bought some shares. And so overall Intel now is the biggest position in my portfolio, and I feel very good with this position. And the loser of the week, at least when you look at the performance, is Jack Henry. Henry, by the way, one of the best performer of the last decade. It's just a compounder, a great company, high profitable. But last week, or even in the last weeks and month, they underperform the market. And so last week, Jack Henry lost 5.49% to now $145.64. And here we see the long-term chart, and you see it just goes up and up. And now in the last year, let's say, this is quite a consolidation, but the numbers are still great. The problem is with Jack Henry that it was a little bit overpriced and now just come back to the intrinsic value. And so I bought a little bit more now because overall my position is still a small position, but even before was smaller and too small for this great company. I still think over the long term there will be a decent return. So no problem with that. And then I did some transactions lately in the last week. I sold my Chevron stocks for $91.95 with a profit of around 60%. I made another video about that and the deeper reasons why I did that and why I sold Chevron. You find the link to this video here up on the screen, and there I describe how to invest in the oil stocks and what to think about when to invest. And there I explain why I think it was the right time to sell. And then I also added, as I said, I added 4 more shares of Jack Henry at a price of $142.80 and 2 more shares of Berkshire Hathaway at $241.06. As I mentioned also in my videos before, I want to raise my position in Berkshire Hathaway over time. Berkshire Hathaway overall, I think, still undervalued, a great long-term investment. And so I just add over time a little bit here, a little bit there. And so 2 shares came to me last week for $241.06. And with these moves, my current portfolio looks like that. As I said, Intel the biggest position with 8.5% of my portfolio. Berkshire now at 6.5%. And also with the sale of Chevron, my cash position just raised up to now 23.5%. And this is a little bit too much. I want to keep it at around 20%. So it's likely that I will purchase a little bit next week. I'm not so sure right now where because it's really difficult to find. Maybe I will buy some more shares in Intel, even if they gain some value in the last few weeks. Also, Bank of Nova Scotia, Scotiabank, could be a target to buy more. I'm not that sure right now. I have to think about that, and then I will tell you next week. And by the way, if you're new to my channel, you find deeper analyses to all of these companies in my portfolio. I put the link to the playlist here up on the screen, and there in this videos I go deeper into the company, into the business models, the management, the financial numbers. I calculate the intrinsic value and then tell you when and why I bought these great companies. So feel free to check this out. And then I received also some dividends last week. I got $3.96 from MasterCard and another $14.62 from American Express. That's not much, of course, but at least a little bit of cash flow. And then come to the performance overall. The weekly performance looked like that. As I said, Intel was strong last week. Also, the gaming stocks like Electronic Arts and Activision Blizzard was strong last week. And on the downside, as I said, Jack Henry and Leggett & Platt are the losers of the week, but still both are great companies. And the overall performance since the 2nd of December 2019 looks like this. Walt Disney right now is the best performing stock in my portfolio with 85%, and Caterpillar followed with 77%, and so on. And the only stock in the minus right now is Jack Henry. But as I told you before, I will just stick with it because it's still a high, profitable, great company and will be also in the future. So no need to sell or think about selling. The problem with Jack Henry overall is that my first position was just too expensive. And as you know, and as with every other stock in this portfolio, I like to buy my shares under the intrinsic value and way under the intrinsic value with a high margin of safety. And Jack Henry is the exception in that, and I think this is a reason why I'm in the minus here. My first buy price was just too high. And so my overall performance since the start of this portfolio in December 2019 is now 48.5%, and this is an outperformance of 22% to the S&P 500, which have a performance in the same time span of 26.36%. And this outperformance is really, really nice. I'm very happy about that. And so that's the goal also in the coming weeks and months and years, just to find great companies under the intrinsic value and then just build the positions and try to have a good performance. And this almost 50% in a little bit over a year, of course, it's incredible good for me. I can't expect it will be the same if over the long term I have a performance in the double digits between 10 and 15%. I will be very, very happy. And if you want to follow me on this road of long-term value investing, just subscribe to my channel and follow me on this road to financial freedom. So thanks for watching. And if you like this video or the other videos also on my channel, subscribe to my channel, ring the notification bell to never miss another video, and then we will see you the next time with the analysis of another stock, and of course next week with the weekly review and update again as every week. See you then, take care, bye bye.